Dear students, in this video we are going to study about the turnover ratio in ratio analysis under management accounting. Turnover ratio is as 5 types. First one is a debtor turnover ratio, second one is a creditor turnover ratio, third one is a inventory turnover ratio, fourth one is a working capital turnover ratio, last one is a fixed asset turnover ratio. Let us see one by one. Debtor turnover ratio. The formula for debtor turnover ratio is credit sales divided by average accounts receivable. Now you need to know what all come under accounts receivable. There are two items that come under accounts receivable. The first item is debtor, the second item is bills receivable. Now average accounts receivable is nothing but the average of opening accounts receivable and closing accounts receivable. That is opening accounts receivable plus closing accounts receivable divided by 2, you will be getting average accounts payable. Then second one, creditor turnover ratio. The formula for creditor turnover ratio is credit purchase divided by average accounts payable. Again, you need to know what comes under accounts payable. There are two items. Look like average accounts receivable. So accounts payable equal to creditor plus bills payable. So average accounts payable is nothing but opening accounts payable plus closing accounts payable divided by 2. The third one is inventory turnover ratio. The formula for inventory turnover ratio is cost of goods sold divided by average inventory. Inventory is also called as stock. So cost of goods sold equal to sales minus gross profit. Then average inventory is nothing but opening inventory plus closing inventory divided by 2, you will be getting average inventory. Then fourth one is a working capital turnover ratio. We have two formula. One is sales divided by working capital. The other one is cost of sales divided by working capital. Now working capital is nothing but the difference between current assets and current liability. So working capital equal to current asset minus current liability is said to be working capital. You will be getting different answer. Students are supposed to use both the formula because you will be getting different answer for both the formula. The last one is fixed asset turnover ratio. Again we have two formula for this also. First formula is sales divided by net fixed asset. Second formula is cost of sales divided by net fixed asset. Now you need to know what is meant by net fixed asset. Net fixed asset is nothing but what? Fixed asset minus depreciation. Now the student are supposed to work out both the formula because when you use sales divided by net fixed asset, you will be getting one answer. When you use cost of sales divided by net fixed asset, you will be getting one answer. So you will be getting different answer.